Good morning and happy Thursday to you, Tom Tom. How's everybody doing? Well, the battle continues on most fronts here, um, except for the NASDAQ, of course, which is kind of grinding its way higher. We'll get to that chart, but I thought today we'd start with the Russell here, the futures, and you can see the trading range that's getting tighter. And it keeps getting rejected from this level, but buyers step up, and I'll tell you, they are fierce. Um, Yesterday in the afternoon, it certainly looked like things were possibly going to roll over. And, just at the last moment, I forget what time it was. Someone in the green room probably remembers where, it was just kind of teetering there. And maybe it was here. I forget anyway. Anyway, that we were short looking for things to roll over. And that had worked earlier in the day. And, all of a sudden there was this 5-minute wide range bar that popped up there. And, as I said, I'm stepping aside at this point, even though it was in a range. I said, it looks like maybe it's going to go higher. And of course, we know that it did. That being said, it really didn't get all that far. Looking at the daily chart, putting things in perspective, we go to a higher time frame. So, you had the rejection up here. Then the red bar down, which said, hey, it's going to go lower. And then yesterday it went lower, and the buyers came in to save the day again. And so, as we do with our factory work, when we see a larger bar like that, we say, well, if it can get and close more than halfway into it, that begins to neutralize it. And so from the bullish perspective, this wide range bar, as you can see, I'm just going to put that line of slack in the middle of it. The buyers stepped up there yesterday and pushed it back up. So no deep close into the bullish bar, and the bearish bar relatively small compared to here. But all these candle bodies are staying in the upper half. So while this thing just can't get going to the upside, it can't get going to the downside either. Good morning, Germano. YouTube there. So it's a standoff. The battle continues, and we'll just see what today brings. I don't know why today should be a day that things get moving one way or another, but sometimes it just comes out of nowhere. But that's what we have going on. Excuse me. That's a lot of it is going on in a lot of places other than, a select number of stocks and a few markets. Like, the Chinese stocks have been on a tear, even more so than, the FANGs. So weekly chart, as you can see, kind of puts it even more in perspective going to the higher time frame. The opposition, so to speak, of the forces that are going on here, where you had this big red reversal on the weekly, and buyers can't get it to push and close more than halfway into that red bar, where now sellers can't get it to push down more than halfway into this daily green bar. So we've really got a conflicting market here, uncertain market that is looking for some other information to trade off of. And it is what it is, as I say, and it'll some point end, and we'll just have to see which way it goes. And we're always looking at different markets to kind of get a clue, right? So strength, nasty reversal. It hasn't been able to turn back up in any meaningful way yet. This is a weaker market, and this hasn't been able to turn back down in a meaningful way yet. So standoff continues. All right, let's continue with the S&Ps. So we've got, a story of different markets going on here. And so here we've gotten, this bar is still in development, but even the prior week got, eyeballing it maybe a little bit more than halfway into the red bar. And looking at this opens up the thought, right? The question, right, as we do at traders, when we, if things are going up in multiple time frames, the only thought is it's going higher. And so here, we're in this kind of situation, we have multiple thoughts as I'm explaining. Well, this retracement here is right somewhat bullish, but I look at this and say, well, it certainly could turn into an M top, but we don't know until we know, right after the fact. So what we would need to see is some kind of a topping tail or reversal bar here that goes deeper into this bar, and then we would have a pattern that says, okay, from this time frame, let's short, and from this time frame, and this would have to come down here, deeper into this move. Right? That would give us, a bias that we could be shorting, looking for prices to go lower. We don't have that now. So yesterday, got turned around from the red day, and as long as it can stay up here, it can stay up there today, it begins to build a better case for at least a retest of this, which could turn into the M. We don't know. So the trading ranges are getting tighter, which means it's going to become even more difficult, other than those that are nimble, or, of course, trading those stocks that are on their own page, so to speak, really not being influenced that much by the broader markets. Right? So a lot of those Chinese stocks that we looked in MT Live yesterday, we looked in the chat room, some of them are extended already. So at the moment, things are a little more difficult from a swing trading perspective. All right. Let's look at the spiders. And as we look at this chart, because it's not 24 hours like the futures, we see these gaps. So the reversal and a gap up and a gap up and a red bar, and it doesn't follow through, and a gap up and a red bar, and it doesn't follow through, into this unfilled gap over here. So we can just see that what's going on in the ranges that I've already explained, and now prices are at an area where there's going to be more sellers, but buyers step up on even minor dips here, and the bias comes to the same. Prices are at areas of resistance. The battle is going on, and our job is to not be the frog in the blender. Right? What is the frog in the blender? Well, just picture that in your mind. And Mr. Market, or Mr. Schizophrenic, as I like to coin it, is there, sitting on the fast speed button, just waiting to tear you up. So recognizing the environment for what it is, and leaving such alone, right? And say within these time frames, and going to intraday, if that is for you, or finding those stocks that are on their own page, which we do that as well, or using options, which allow you to trade credit spreads, if you have the knowledge to do that, for stocks that really aren't moving a whole heck of a lot. So we have different tools for different environments. And when prices are trending, while you can still do credit spreads, doing directional strategies and using those vehicles will make you a whole heck of a lot more money. So as traders and master traders, we have different tools in our toolbox to utilize how to make money in different market environments. NASDAQ futures, no problem, up, right? Buyers keep stepping up on the dips. It's going up. There's nothing to stop it. At this point, we've got our topping tail that was ignored. I talked about this wide range bar that often results in a slowing in momentum, and the momentum slowed, but it didn't go down. And slowing momentum doesn't mean prices have to go down. Right? They can go sideways. And that's what happened over the last 2 days after that bar. And so far that's bullish. And they're up here this morning. Now, as prices continue to push up and up and up, at some point, the sellers are going to come in, and maybe if they should see, this market start to roll over, right? That is going to be something that's going to grab their attention. Hasn't happened yet. Of course, this could go up. The transports, right, can't get out of their own way either. Maybe they join the upside party. They go down. So the more conflicting information there is, the more we tend to look at more things and question which way they're going to go and keep an eye on them and setting alerts. Whereas when everything's firing on all cylinders, it makes it easy. And of course, we think we're market geniuses because at those times it's easy to make money. But our job is to keep things in perspective of what's happening. That's what we do here every morning. So the Dow futures here. Again, the buyers saved the day. Big red bar at the 200 MA at prior area where they fell from. And so far, sideways and a red bar ignored. Bullish. Right? Pullback pattern here. Looks like it can go up. Right? Not a lot. Right? But from an intraday trading point of view, not bad if it can get up into this area. So again, what we do here is look at what is, recognize that we don't have the ability to change what is, but how can we take advantage and profit from what is, right? Or move from this vehicle or move on to other vehicles, which Dan shares with you open trades every day and gappers and different ideas for other trading opportunities. All right, bonds are up here a bit, but going nowhere. All right, so uncertainty there as well. Looked like it was rolling over, back up. Is it an M top? Is it bullish sideways action here? We'll know when we know when it actually breaks one way or another. So buyers on the dip, sellers on the rally. Range is getting tighter again. And oil. Well, you see how things that caught my eye there? So that's like, whoa, what happened? 5-minute chart. Oil's collapsing. Well, from a 5-minute chart perspective, we would agree, yes, it is. But from a daily chart perspective, nothing's going on. Narrow ranges. It's an inside day. So this is why we start with higher time frames and then move down to lower time frames. Right? Put in perspective what is in the larger, and then you can then take that bias. So even though this is dropping sharply at the moment, this congestion that's been going on, this could easily, right? So as a active trader, you might be saying, let me jump on board this and short this. It's gonna go down and I'm gonna make blah 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 all this money. Well, my experiences with patterns like this, it might go down a bit more and then it'll be right back in your face. Again, you have to know what you're dealing with from a multiple time frame perspective. Not look at a 5-minute chart or a 2-minute chart and think something of significance is going on. Maybe it is from this time frame, but as you can see here, it's not all that significant at all. All right, gold has been doing well. I believe it'll continue to do well. And you can see here from a shorter time frame perspective, it dropped and moving back up again. Buyers will continue to show up here. Been really choppy there as well. Finally got out of the range, and through whatever gyrations, I think this will continue to go higher. Okay, and I think that is about it from me. What else to look at here? Interest rates not really doing a whole heck of a lot. Oh, so you want to keep an eye on interest rates to see if they do start to drop when bonds are going up, which will probably equate to equities coming down. And still of a concern is that the option traders continue to increase their bets that this market's going to go higher. And historically, being on the same side of these folks does not make money for long. So that's a concern. The weak breath is a concern. Recognize what is. Keep an eye on the exit door. When the time comes, take advantage of what is in favor. And that's what we do day to day. All yours, Dan.
All right, thanks. Good morning. Yeah, I was listening to El Alarian this morning, and I agreed with him. He was talking to me. He was scratching his head also, like I have been for the last 3 months, talking about valuations, narrow breadth, and he was saying, you know what, these go-to stocks, Apple, Microsoft, Netflix, the FANGs, the software companies. He's like, he thinks that people are just going to them, not caring, but they don't care about value. It's just the place to be in the market. They're viewing them as, the safety stocks. But yeah, what he was saying was I agreed, but he's like, someday valuation is going to come to reality, but he said it's not now. And he definitely underestimated the magnitude of the rally, as I have been too. All our opens are fine, so let me look at any gappers first, and then if we have time, I'll come back to all the opens. Let's see. Greg, MC is the stock. Somebody's asking about a Condor.
No, MC, I believe, is the person's name in YouTube that mentioned this.
So what's the stock?
Iron Condor.
What's the stock symbol?
Well, he's been so impressed by your analysis that he thought that you would somehow clairvoyantly know what it was. I'm kidding, but I don't know. Maybe he'll type it in there and I can tell you.
All right, let's look at gappers here. Wow, this is a crazy pattern. Wow. So this is a big gap and crap yesterday, and now it's gapping over the high of this, trapping all those bulls in that bar. Holy cow. But it's too extended now, but that's a crazy pattern. All right, they were asking about spiders, a condor. I am very specific on how I enter condors as an opening trade, meaning both sides at once. And the reason for that is I always have more of a bullish or bearish bias. So why do I want to, so I start out with one. So I definitely on the spiders have a bullish bias because you got this beautiful retest here, support, the rising 50, it made a higher high. It's gone sideways for 2 days in the upper 80% of this move. This morning, it's making a big move. It's at resistance, sure. But if it can go sideways for an hour, I think over the 1 hour high, it looks higher. So I wouldn't do anything right now on the spiders until I see what happens. Is it going to fail miserably here and then take out yesterday's low? In which case, yeah, then that would be a better pattern for a condor. Because I would still have support here. So even if it took out yesterday's low, that just gives me more confidence that that's a short-term reversal at the top of the range. So I hope all that makes sense to you. So I would start off with a put spread, and then if it takes out yesterday's low, then put on a call spread, which is legging into your condor. Noticing SIL here, we entered this yesterday. So silver ETF, that's doing well. I just saw this little guy rocking here, a sporting goods store. Let's see, that gap's too big. I got no interest in that. But if it sets up as a day trade, it might be okay. Shill has been one of these toy stocks for a while. It's a sloppy pullback. But it's getting a nice gap here, and you have the 2-bar reversal. Hey, Cameron, if you can put your drop down, help panelists and attendees. I mean, so look, Zoom at $266, and those idiots still can't fix the drop-down default. That's mind-boggling to me. That's annoying. Daku gap up, but Cameron, yes, it's gapping up, but you got to tell me what you're thinking, because I don't know what to do with this. It's a runaway stock. Look at the angles. Look at the angles of these MAs. That's telling me it's long-term, very extended. It's had a heck of a run for a year. It's still a bullish 15 minutes, so I don't know what you're thinking. Are you thinking sell a call spread, gap and crap? Are you thinking 15-minute buy setup to go long? I don't know what to do with this right now. Stephen McCallan, well, you cannot trade the VIX. That's just a mathematical formula, unless you're doing options on the VIX, which are still, the options are based on the futures. So my point is, let me just look at VXX, which is the volatility ETF. Why would spread explode this morning? What spread? I'm not sure what you're talking about. And nothing has exploded on the VXX here. You know, had an M top. And you know what? No, just no. Just ignore that. Ignore it. You're thinking of stuff in your head. It could be rolling, whatever. There's nothing unusual going on here in volatility. But you know, Greg, you got to keep reminding me, or anybody out there. I love day trading this, the equity, and I love trading options on it too. But look at, you know, yesterday afternoon when I said I was waiting at 245 to see what was going to happen. As soon as we got that breakout bar where I said, okay, now I'm more comfortable that we're bullish into the close. Do you all remember that discussion? So look, that was a bearish engulfing. Beautiful. Look, this is a beautiful M top. Beautiful. So right under this green bar was a beautiful day trade short. So I have it right in front of my face over here. I just so just automatically, whenever people are thinking about, hey, I'm going to go long or short the spiders, immediately let's look at this thing. All right, Trader McGraw, I'm giving you that responsibility to remind me. Yeah, if you're looking at, hey McGraw, you're drop down also. Yeah, if you all are looking at the VIX Central, which is showing here, let me get it for you. Here, actually, I'm gonna show this to you right now. Why not? We got time. So this, you go to vixcentral.com, and what the heck does this show us? McGraw, do you want me to give you the mic and you explain it? All right, so let's simplify it. These are VIX futures. This is what the VXX is priced on, is the futures. So the stupid arrow, turn it, can't point. So the fund manager has to continuously roll his VIX futures. If this line is going up, that is contango. All that means is, folks, don't let words get crazy in your head. Here, let me drop this down a little bit. All contango means is further dated VIX prices in the futures are more expensive than the current one. So look here on the bottom, percent contango. It's telling you from the front month to the next month, it's 3.75% higher. So that's from here, 30.40 less 29.30 is your 375. Then it flattens a little bit from August to September. Why does it then skyrocket into October? As McGraw said, election risk. Election risk. So we're expecting volatility to go up then. And then when it starts to come down, once we get it timed with the broader market, we're going to start shorting volatility again. So backwardation simply means further out months are cheaper. So it's the futures market just saying, we expect calmer seas ahead, or we expect rough seas ahead. Now, do you remember when this thing blasted off? I don't know how to go back in time here. VIX terms. I mean, I'm not going to waste any more time, but if you went back to the beginning of the year, you'll see that the market crash we had in March, this thing was off the charts high. So the contango, the angle was off, was like a rocket ship because of the crashing markets. All right, enough of that. But let's continue here. CNI, little transport I like. That looks good. McGraw, I know you gave me a different one. And we're actually in JB Hunt, but this looks great. Cisco. Cisco, this is a gap. Let's see, the high 46.72. Yeah, Cisco looks great. Let's put that in a window here. Cisco Kid. Cliff, Baba. Yeah, the whole, we scanned them yesterday. We scanned the stocks on KWeb. This has been on fire, the Chinese internets. And remember, do y'all remember I came so close to giving us NTs yesterday because this one was the least extended and I was going to give it today over yesterday's high. And there's the risk. The risk of waiting overnight is a double-edged sword. And we just left 40 points on the table from an overnight gap. Is that amazing? But this was the very best one that I found in the KWeb. Well, there's two of them. I like that and Juliet Delta. I like the bullish gap yesterday. And now that's having a beautiful gap up. Those are the two best I found. EXPR, I don't see any pattern there myself. It's in a downtrend. It's a mess. Why do you want to mess with garbage? Unless you're dumpster diving. We're on CLSK, gap in a 385. The gap's too big. This looks like a pump and dumper stock. Every time it gets a short-term rally, it gets smacked. So I have zero interest in that myself. EXPR, no, it is not a climactic buy setup. It actually was here. Arun, let me show you. Here it was climactic because look, you want the rubber band to get extended and get far from the 20. This is more, just because it's 5 bars, there's a difference between 5 red bars and, far from the rubber band. So no. YouTube's asking about net, NET. It's bullish. It's bullish. It's extended, but 30-minute high looks higher. What a beautiful 1, 2, 3 right here on June 16. What a no-brainer entry right there. But 30-minute high looks higher. Yeah, I ain't chasing. You know, when I use that word ain't, I ain't chasing Microsoft. If it goes higher, then that's not my trade. You know, up 8 bars. Zulu Sierra. That one's, I'd rather buy that one than Microsoft. Because you got a beautiful 15-minute chart yesterday, and now you got a 180 reversal pre-market. So that one looks higher. Stop days low. FLGT, nah, it's at the top of the range. I got no interest on that. JSON PNR, sloppy. TPB, never heard of that. Yeah, that has room too. Look at the monthly is a reverse head and shoulders. It trades very sloppy, so you got to give it a big stop. Yeah, I don't like this resistance here on the weekly, but you know, it's a watch. Raj is asking about plug. Now let's say you asked me about climactic buy setups. This is a climactic sell setup. That's climactic, far from the 20. You got your topping tail. So now it's breaking down on this looks like a nice day trade short right here on plug. You know, whenever I see rocket ships like this, you hear me say they will come back to Earth. It's just a matter of when and what and how, what the picture looks like. That looks like a great day trade short. All right, our Cisco's coming in here a little bit. Oh, I had RCL. I have RCL as a put spread for us. I posted it pre-market. The put spread right now is 118, 124. I said, let's do it a minimum of 130. And now it's 134, 136. So I'm going to do it. I'm not getting filled.